Thank you, Eric. Good afternoon, everyone. As Eric said, Michael Hopley is unable to attend today, and he passes on his regrets, and I'm happy to fill in. So Sunridge has been active in Eritrea for 12 years now, since 2003. It started out as essentially grassroots exploration. We were very successful. We had a tremendous amount of exploration success. And since then, we have now drilled an amazing amount of 400,000 meters of drilling. We've defined 6 deposits, copper, zinc, gold, and silver deposits. And in the last few years, we've gone through the whole gamut of development, beginning with resource calculations, scoping studies, pre-feasibility studies, a feasibility study completed in, definitive feasibility study completed in 2013. We've done a tremendous amount of metallurgical work, environmental work, and social work. And this all brought us to where we achieved last month, the major milestone of signing a mining agreement with the Ministry of Mines in Eritrea, which is the last step before the acquisition of a mining license. And it's enabled us to now look forward to production next year. The feasibility study, which was completed in 2013, considered our 4 lead projects, and it demonstrated very strong economics, with a post-tax net present value with a 10% discount rate applied of $428 million, and that is, yields a 27% IRR post-tax, so very, very healthy. It also outlined a phased startup, which in light of the market conditions today is very important. It allows us to get into production next year fairly quickly with the initial capex of only $32 million. And that will transition, and it'll create a significant amount of cash flow, which will fund build-out. Now, once full production is achieved a few years later, the project will produce 65 million pounds of copper per year, 184 million pounds of zinc per year, with significant gold and silver credits. So you can see, despite our name, Sunridge Gold, we're essentially a base metals and gold company. In fact, 50% of projected revenue does come from copper, 35% from zinc, and the remaining 15% from gold and silver. We have the government as our partner. They are a participating partner through the Eritrean National Mining Corporation, ENAMCO, a great supporter, and they're paying for their share, and they're funding 1/3 of all project costs going forward. In addition, there is tremendous potential exploration still remaining on the project. But for now, we are focused on moving what we do have, and we've defined already, into production, and we'll revisit exploration at a later date. The country of Eritrea sits on the Red Sea. There's a long coastline, as you can see in the map. Asmara. Asmara is the capital city. It's a very beautiful, safe, clean capital city. It was formerly an Italian colony, so you got great Italian architecture, great Italian food, and the best coffee in the world. The port of Massawa is 120 kilometers away by a paved road, and that's the port. It's a modern port facility. That's where Nevsun is currently shipping their copper con to. Our project is to the north, west, and south of the capital city, fairly close by. Also on this map, you can see Nevsun's Bisha mine, which has been operating now for 4.5 years, and clearly demonstrated that Eritrea is a great place to work and operate. Also on the map in the north is Zara mine. It's a gold mine. It's currently being built and developed by a Chinese firm, and it's due to reach commercial production, well, any day now. Now, zooming in on our project, that map, to give you an idea of scale, is about 60 kilometers top to bottom. That's the capital city of Asmara in the center, in the gray, and our 4 lead projects, which were part of the feasibility study, in the dashed line. The most important and largest by far is our Embedero. It's a 70 million ton measured and indicated copper, zinc, gold deposit up in the northwest. That is the center of operations. That's where the mill and tailings facility will be built. And then the other 3 are really treated as satellite deposits. Adinefes, 7 kilometers to the east. It's small, but it will provide a significant sweetener, a very high-grade zinc copper sweetener. It's over 10% zinc, 1.8% copper with gold and silver. Just south of it is Gupo. It's an at-surface gold deposit, gold only. And then moving 40 kilometers to the south is Debarwa. Debarwa is an extremely high-grade copper, zinc, gold deposit, and it's very important to us because that's where we will begin our mining operations next year with an extremely high-grade direct shipping ore zone averaging 16% copper. We have government participation in our project, and 1 year ago we established the Asmara Mining Share Company. That is the entity that will build and operate the mine. It is owned 60% by Sunridge and 40% by Enamco, the state mining company. It's funded 2/3 by Sunridge and 1/3 by our partner Enamco. In addition, Enamco is paying us for, they get a 10% free carried interest. They are paying us for a 30% additional interest, $18.33 million. They've paid us $5 million so far. The remaining $13.33 is on a set schedule. In addition to that, they are funding the next $5.5 million on their project, on the project, for retroactively covering their 1/3 of expenses, historic expenses. And once that is done, the project is then funded 2/3 by Sunridge and 1/3 by Enamco. The feasibility study outlined a phase startup, and our first phase is that 16% copper zone with gold and silver at Debarwa. And we can be in production fairly quick for an initial capex of only $32 million, which will provide a very, very quick and significant injection of cash into the project, which will help with further build-out. Phase 1B is a gold heap leach operation. It mines the gold caps on these on 3 of our VMS deposits. Moving into Phase 2. Phase 2 is the supergene copper zone, which sits roughly 30 to 60 meters below the surface on 2 of our projects. It's sort of equivalent to the zone that Nevsun is mining right now at Bisha. And that would take about 1.25 years. And then the final phase, Phase 3, which we'll transition into, it's a 13-year mine phase, and that is the real value of the life of the mine. We'll mine 4 million tons per year. Mine and process 4 million tons per year, producing a zinc con and a copper con. Now, because I only have 10 minutes here, I just want to focus on a Phase 1A. Now, Phase 1A is at Debarwa. That's a 3D model of Debarwa, and you can see it's about 1.4 kilometers along strike. The top 30 meters is a gold oxide zone, averaging 2.4 grams per ton. That purple belt, if you can see it, is supergene enriched copper. It averages 5% copper. But very importantly to us, where that ellipsoid is our direct shipping ore zone. It averages 16% copper. There's 116,000 tons of it. And as I said, for $32 million, we can get into production, mine, crush, and ship directly to a smelter without building a mill, which would bring in significant cash flow. There is an example of this a few years back in Australia. Sandfire developed their DeGrussel mine in a similar way. They had a DSO zone. They mined, crushed, and shipped it, and it paid for future expansion. And it's been a very big success story. Now, contained in that zone, there's 39 million pounds of copper, 7,000 ounces of gold, and 56,000 ounces of silver. There's another shot at it. That is the starter pit, what we're seeing there. That's the gold cap that sits above the DSO zone. That'll be mined and stockpiled for the time being. It'll take about 5 months of mining before the DSO is exposed. But then once exposed, we expect to ship 10 to 12 kiloton freighter out of the Port of Massawa every 20 days. The cash costs are very low, 70 to 80 cents are C1 costs for the Phase 1 operation. And the product we're finding is very coveted by both smelters and traders alike, mainly because it's a very clean, very desirable product. It's very low in elements that the smelters do not want, such as arsenic and mercury and others. And what we're finding now is there's significant demand for it, in fact, even at a lower grade. So at 12.8% copper, lower in the average grade, there's 220,000 tons of material. And that would contain over 60 million pounds of copper. So as you can see, even at today's relatively low copper prices, and even if copper drops to $2, we don't want to see that, but we still will be proceeding as quick as possible to move towards production. We expect to We'll announce our financing plans in the coming months, but we expect to finance the $32 million through non-dilutive methods, which include government participation, equipment financing, and a debt facility. Our timeline we're quite proud of. You can see through rough times in the market, we have been able to achieve very significant milestones. In 2012, completing a pre-feas, 2013, completing a feasibility study, and the last little while was focusing on the permitting process. Now it's full speed ahead. Once we get our phase 1A, our financing plans in place, procurement, mobilization, we expect to be moving dirt by second quarter of next year, 2016, and commercial production achieved by the end of next year. Now, in summary, major milestone last month in signing the mining agreement. We're happy to have the government as our partner that has helped fund the project. We have a great plan with a low capex of only $32 million to get into production. We expect to finance this through non-dilutive methods, and that will help build out, and eventually, once we reach full production, we'll be producing an enormous amount of copper and zinc, 65 million pounds of copper per year, 190 or 184 million pounds of zinc per average, with gold and silver credits in the copper con. The last point, the M&A file is open, but that's not our focus. Our focus is moving what we have into production and achieving the milestones on the previous page. I'm around all day. I'm in the foyer. If you have any further questions, or please feel free to contact us anytime. We're in Vancouver. Thank you.